Welcome to Drill On Earnings. We have quarterly results from Adobe. This is their fiscal fourth quarter, just wrapped up the end of November. This is the business story about one stock on the move. I'm Cory Johnson, Chief Market Strategist for Epistrophy Capital Research. When we look at this, we want to tell you what's going on with the numbers. Wall Street didn't really mind the numbers. They were better than estimates, I guess. $15.6 billion in revenues and earnings per share also beating the estimates. But 11% revenue growth, kind of right where it was last quarter, kind of where it's been, right around 10% for the last 2 years. Although the business has changed quite a bit, right? They've spent a lot of time and money investing in artificial intelligence. They've got a lot of exciting new products going on. They've got, all kinds of changes in the way their users can use things. One might have worried that this business would have been left by the wayside with generative AI and the ability to create images and even vectorized images using the verb in a different way, a vectorization of a large language model to create images. But they've updated their products. They've got their Firefly incorporated in lots of their creative products. I use a lot of them myself. The business is steady Eddie. Fantastic operating margins at 35%. They did have to pay a big termination fee for an acquisition that didn't go through 4 quarters ago. But other than that, operating margins have been really solid, above 30%, 35% this last quarter. The Creative Cloud is their biggest revenue business. So the Document Cloud, that's PDF stuff. And that's 15% of revenues. But 59% of revenues are all of the apps, whether it's Photoshop, Illustrator, so many different professional apps used by people in the creative industries. That business is doing, decently. It's growing at 10% on all their Creative Cloud apps. If you think about it and want to separate out the PDF business, what they call the Document Cloud, that's growing at double digits, but a lot less revenues for that. So 17% top line growth there. Again, kind of steady what the business has been doing for a long time. Their remaining performance obligations, really strong, 356% of revenues, which is to say that they are looking at kind of steady growth for quite a long time to come, but not fantastic growth. And I think maybe that's disappointing Wall Street a little bit. The stock was down 9% in after hours trading. For the year, the stock is down 12%. In a year that's been pretty good for technology and technology stocks, in a year that's been really good, the stock market itself up, where we have the S&P 500 for the year up 32%, and these guys down 12% and down even more in after hours trading. It's just not good. And maybe the most disconcerting thing here is just how exciting the discussions of the products are, the changes are, and yet the growth remaining so kind of ho-hum. I mean, if you look at, one of the numbers that they give us in every quarter is they give us their annual recurring revenue on an annual basis. And that number, is it ticking up? Yeah, but when it's ticking up at 3, 4, 5% sequentially, not as exciting as the discussion of all the products, and indeed their plans to move into lower end products as well as their high end creative professional products. Shantanu Narayen, that was put to him by one of the analysts on the conference call kind of directly, and he did his best to answer the question. Here's what he had to say about the digital media numbers. That's the combination of the Document Cloud and the Creative Cloud. Digital media business only growing, the annual revenues growing on a sequential basis of just about 3 or 4%.
I think specifically maybe as it relates to the Q4 digital media net new ARR and thinking about it from the creative, the one thing that I'll point out there is that actually creative did better than probably is evident in that. If you think about the contribution of Acrobat that went into the creative bucket versus the Document Cloud business. So certainly Acrobat continues to do well, record as you saw, but the non-Acrobat contribution in creative actually had more growth than what you would see if you just look at it from a Creative Cloud ARR.
So the non-Acrobat contribution to creative was a little bit better, but fundamentally the slow growth in these annual recurring revenues is just not exciting. The analysts on this conference call, at least, and including me, but steady Eddie is the story there. So what's our big takeaway from Q4 earnings from Adobe, and why didn't the market like it? Well, the numbers were decent. Revenue growth driven by AI and the apps at 11%, pretty decent on the top line number. And really, the one number that tells you a whole lot really is all three numbers, three main businesses. Digital media, Creative Cloud, Document Cloud, growing at double-digit rates on a year-over-year basis. But average annual recurring revenues, maybe not growing so much. That's the story with Adobe. All right, thanks for checking out Drill Down Earnings. I'm Cory Johnson.